The U.S.'s current deficit, $34 trillion. It took us 200 years to get to the first trillion, and we've managed to add that up 34 on top of it. So, and what that means in terms of people and consumers is that there's competition then for borrowing and for capital. And if the governments are going to be your biggest competitor, it's likely you're going to have much higher rates for a much longer period of time in the long term, perhaps after the short, reset. And I think that, the risk of higher interest rates is one that people don't think about, as much as they should.
Is that directly related to the geopolitical risk out there?
Well, I think geopolitical risk can actually add to that, right? So I think that, again, instability in the world is likely to have significant swings in this. And so, the interest rate component, when I started working on Wall Street many years ago, current coupons were 12, 13, 14, 15%. So much, much higher rate profile than what we have today. And I think people have become used to these much, much lower rates. And the question I would ask to people as investors is, what happens in a world where rates are actually much higher for a longer period of time? I think that can be very, very destabilizing.
There are a lot of concerns that a lot of this decoupling of countries, a lot of the conflict that we're seeing in different regions could lead to a spike in energy prices. How concerned are you, and how much do you think energy pricing can change in the next couple of years because of it? Well,
you're going through a period right now where, oil prices are falling and there seems to be an abundance of oil. But when we never asked the question, we haven't discussed the topic of energy transition. My perspective is, although it's great to have, all the renewable, policies, and it's something we are ourselves, very involved in and adamant supporters of, it's going to take a long time before there's true defossilization of these. And so I think we should all be prepared to be using oil and gas in our daily life for a long time. And when you have a significant part of your cost structure that can move up and down in price significantly, that adds a lot to the volatility of the framework of your business.
You worry about the pricing, but what about just the economic security, the energy security involved when you think about these escalating conflicts?
Well, it's a really good question. When you look at what happened with the Russia invasion in Ukraine, and they shut off the gas to Western Europe, that all of a sudden energy security, which wasn't on everyone's lips, became the thing to do. And they responded quickly by building, terminals to bring in gas. It looks like they've done a good job of managing it. But energy security was not a topic that was on the top of people's minds. That, again, gets right at this kind of deglobalization trade. There's just a lot of uncertainty about how the countries are going to work with each other. And that results in just a higher uncertainty coefficient that you have to get paid for it to be a fair investment.